All right, guys, let's do this thing. Good morning, everybody. I hope you're doing absolutely fantastic on this glorious morning. Of course it is Tuesday, January the 22nd, 2019, foul year of our Lord. Now, moving on, guys. We had some interesting action happen last night, of course, while I was sleeping. Now, I'll just have you guys know that I even started staying up later. I am normally an in bed by 10 o'clock, up by 4 o'clock in the morning kind of guy, if you know what I mean. But because of the actions lately, because of the timings of large movements in the market, I was staying up to 11 to 1 o'clock just so I could make sure that I capture correct trades for the subscribers. Last night, even stayed up till 1:30 o'clock in the morning. However, there are alternative reasons for that. I had a few business meetings last night with individuals who are in time zones not the same as mine, talking about some possibilities coming up in the future, moving on. But, of course, I fall asleep and the liquidity grab happens that I really was not. I didn't play it. I didn't have a trade down there. I didn't have a buy down there. So remember, as I said, and as I've said many times, when we look at key areas in the market where we do expect the market to dip down to, having Hail Mary buys at key areas of support far below consolidation ranges is not a bad way to play. You can just look on BitMEX or any exchange of your choice. Of course, it's going to be more pronounced on BitMEX, where if you do set those Hail Mary trades, again, it's not the most... I'm not just saying you set your buys or your sells up, really high, because you do have to constantly evaluate that. One of the tricks that you can fall, or excuse, one of the traps you can fall into is if you just have these Hail Mary orders set and you don't have any system built around it and you're not updating. Say you leave a really big short order on the books and you kind of forget about it because price doesn't wick up there, and you go about your trading. And then price naturally walks yourself up there. The next thing you know, you're trapped into a 10,000 position short as price is just moving against you. So just make sure that if you do something like that, that you're not throwing caution to the wind, that you do look at that as establishing a trade, that you are establishing a stop loss, that you're setting everything up. Now, another thing that you can do also is if you're going to be using the MEX platform, the way to do it properly is to set a limit order sell, for example. If you want to go short far above price, just reverse this if you want to go long. Make sure you set your stop market. And then what you can actually do is set your take profit limit and set your trigger price to your entry price. That way, when your entry gets hit, your order will automatically be put in the books. Now, we've been experimenting with that for a little bit. So the other way to do it is to use a stop limit order as well. Now, alrighty then. Let's take a look at what we got going on. Let's get in here. Let me adjust this just a little bit. Maybe I'm just sitting up too high. If you guys have any questions, as always, feel free to pop them in the chat. I just want to say good morning to everybody. Jasper, thank you, man. Yes, I did fix the audio. Hopefully you noticed that. John Dunn, good morning to you. Jurgen Ernst, Fernando, Sachin, Stephen Caruso. Hey, how are you doing, man? Ethan. Jasper, I'll allow that comment. Jake Rezio, good morning to you, man. Fox Trader, hey, what's going on, man? Satoshi Nakafomo, yes, awesome. Magic the Crackening, I like it, man. Scalped 15 million Vechain for 0.8 BTC profit. I'm done for the day. Hey, that's all you need, man. Don't tap your test so hard. Hey, this microphone is so gosh darn powerful that I've done really everything I can to jack up noise suppression so that it doesn't pick anything up. Unfortunately, I just bought too darn good of a microphone. So, hey. All right, guys, let's, yes, we don't want to be doing the crypto Kirby NLP going on here. So let's go to a couple things I want to go over before we get into the charts. I do want to, obviously the stuff that, this isn't like one of those, I'm just going to read the news and yeah, that's all the value that I provide. I think that those guys are somewhat pseudo useful. But there are when something interesting comes up that I want to share with you guys, I'll do that. Before we begin, as always, if you guys would like to join the premium trading group, if the 2018 bear market has hit you too hard, and if you would like to join a profitable, honest, and transparent trading group, of course, feel free to check out premium.crackingcryptocurrency.com. The description is in the link below. You get access to not only mine, but the other traders and analysts for Cracking Crypto. You get access to their trade setups and signals, access to the hidden Discord, the members lounge, chat room, and the VIP day trading voice chat, our resource library, your own trade journal, our live tracking journal, and access to our webinar series designed to teach you from scratch how to be a baller. I like that one. All right, guys. So first thing from Bitcoinist.com, avoid these exchanges if you want to keep your Bitcoins. So this is interesting, and I'm not going to read the whole article, but I read this morning. So hackers have stolen over $1.8 billion in 2018 from exchanges. And what this cybersecurity firm has gone and done is they've evaluated all exchanges based on, do you guys offer two-factor authentication? Do you guys require strong passwords? Do you guys have a bug bounty for looking for white hat hackers to help you improve your security system? How many times have you been hacked? What is your how many times have you been gotten requests from law enforcement agencies? How communicative are you? How active is your Twitter feed? How active is your Telegram? How active is your Discord, et cetera, et cetera, et cetera, right? And the reality is that we all know this. Are your funds safe on an exchange? Short answer, no, they're not. Because remember, this is cryptocurrency. The blockchain is immutable. Whoever holds your private keys holds your funds, okay? If you do not have your private key, it's not your cryptocurrency. You are entrusting faith, and this is a question that I get often because remember, I just got back from Wisconsin where I spoke at an investors conference about cryptocurrency and blockchain technology. And one of the questions that I get is, Justin, you just explained how like this is, very resistant to attack and very resistant to a manipulation. So why do we hear all these stories of hacks and this and that? Well, if you try to circumvent the system that blockchain was designed to solve, the problem of trusting in central authority, the problem of investing your funds into a central place, a central point of failure, if you do that by bypassing the decentralized distributed network system, the entire system that was created to be able to solve this problem, then I don't know what to tell you, man. I don't know what to tell you. Now, obviously, I do keep funds on exchanges because I am an active trader. However, when it comes to the portion of your cryptocurrency that you consider an investment, or more poignantly, the way that you plan to go in and out of crypto. So let's say that you're looking at a midterm to long-term trade. Okay, great. Well, you can purchase your coins on an exchange, withdraw them to your cold storage, and then return them to the exchange when you want to make your trade. Now, is this convoluted and complicated and a pain in the ass? Yes, it is. But does it increase your security? Yes, it does. Now, obviously, this is not recommended for just about everybody. If you are trading on exchanges, I'm going to assume that you're not in the lower percentiles of intelligence quotient, and I'm going to assume that you are playing with money that you can afford to lose. I am assuming that you are also prepared to establish longer term positions with more of these security related approaches in mind. Now, just to cut through the long and the short of it, so this was done by CER and Vechain. They evaluated the cybersecurity in the top 100 exchanges by volume on CoinMarketCap. And basically what they found was fairly lackluster. So they ranged, as I said, they went over two-factor authentication. They went over server security, SSL, TLS certificate, or TLS handshakes, SSL, secure cookies, open ports. Do they have code injection from plugins, et cetera, et cetera, et cetera. CAPTCHAs, all this stuff. So here's the TLDR. Avoid these exchanges if you want to keep your funds. So the absolute worst exchange by security was BitHum. It's not BitThumb. There's no two T's there. It's BitHum. CoinCheck and Zaif. All right. So if you have funds on these exchanges, maybe consider stop. Just stop. The best exchange for security was, drumroll, Kraken. Of course, Kraken. In my experience, Kraken, their user interface, a little difficult to use. Their customer service, pretty much fantastic. Their ethics, pretty much fantastic. One of the most honest, transparent exchanges, founded by some real OGs in the space. Been around for a long time. They receive more law enforcement requests than anybody else. They are the most privacy-centric. I think they have probably some of the best developers as far as their security goes. And yeah, they scored the absolute highest on the security factor. Followed closely by Coinbase Pro, Binance, and BitMEX. So Kraken, I think, came in at a 9 out of 10. Coinbase Pro racked up 8.74, and Binance and BitMEX coming in at about 8.50 each. So in order of safety, Kraken, Coinbase Pro, Binance, and BitMEX. I find that is also an inverse relationship to profitability. So what are the most profitable exchanges to trade on? BitMEX, Binance, Coinbase Pro, Kraken. Maybe switch Kraken and Coinbase Pro. Yeah. All right, so just keep that in mind. I'll drop this in the chat for you guys. All right, and we'll move on. So this has absolutely nothing to do with cryptocurrency, but as a young man, I incurred student loan debt, and I'm going to assume that a lot of you are incurring student loan debt as well. And people have tried to scam me as far as my student loan debt has gone. Now, paid off now, not to worry, but I just want to talk about some of the stuff because I did receive some of these calls. I have seen some of this stuff happen to people that I like, people that I love. So if you receive a scam like this, just be aware. All right, so the top 3 student loan scams of 2019, although I was aware of these, or at least one of these in particular in 2018. So the first scam is student loan consolidation scam. The way that this works is you'll have a company call you and promise to consolidate your student loan debt and lower your monthly payments. Now, this did happen to me before I had my student loan debt paid off. The reality of the situation is, so let me just tell you from personal experience. This lady called me, said, hey, blah, blah, blah. We see you got all these student loan debt. I'm like, yep, that's right. She's like, well, how about you pay us, or, they didn't tell me the price up front. Well, listen, it's going to be amazing. We're going to take your student loan debt. We're going to wrap it in a nice package. We're going to put a bow on it. You're only going to pay 50% of what you're paying now. It's just going to be absolutely fantastic. It's just going to be amazing. But the reality is I did some research and realized you guys are going to charge me like $1,000 to do this. Okay. I made a few calls to the actual company, or excuse me, the actual bank that held my student loan debt. I called the, I can't think of the actual names of the places, but you call the actual companies, right? The actual government agencies. And it's not, they do it for free. They do it for free. You do not have to pay a third-party company an exorbitant fee to actually consolidate your student loan debt. That process, all they're doing is what you can do for free and charging you for it. And it takes a few phone calls, maybe a few hours in a week to get it all done. So if you have student loan debt, I do recommend that you consolidate it. It is the better financial option for your future. You will have lowered monthly payments. You will reduce your interest rate payments. Hopefully, you got to pay attention to the details. The devil's in the details. But honestly, if you're struggling financially with your student loan debt and it's sitting over your head, consolidate your student loan debt. I highly recommend that. I consolidated mine and was able to pay it off much quicker. The reason I was able to pay it off much quicker is because my income greatly jumped up, but it is what it is. IRS student tax scam. You'll receive a phone call from someone claiming to be an IRS agent who claims that you owe federal student tax. This is bullshit. There is no such thing as federal student tax, okay? All you can do is report them to the IRS, all right? So if you get a call like this saying that, hey, you owe student loan debt, and guess what? You owe tax on this, and if you don't pay this tax, we're going to come to your house, and we are going to take your brand new Subaru. All right, not going to happen. The IRS does not charge a special tax on this. The other one is student loan forgiveness scam. Student loan debt company will offer to forgive your student loans for a fee. That's not true. There is no, student loans are one of the most pernicious, areas of government-backed debt. It doesn't happen like that. They're not going to forgive your student loan debts. You can't even discharge this stuff in bankruptcy proceedings. So not going to happen. That's an absolute scam. Report them to the CFP. Okay. Hopefully that was helpful. Now let's get over to the charts. Okay, you guys didn't see that? All right, so let's talk about what happened last night. Interesting stuff. Big wick city, right down to 3430, right around roughly that area, the area that I was talking about as well. So I was talking about downside targets for a short. There you go. Now, what's going on today? Now, again, this is also the thing I was talking about, having Hail Mary buy orders set down there. Didn't play this. I went to bed before all this happened, and I don't like to hold open risk overnight unless I have a full pre-planned strategy. I did not for this, so whatever, it's okay. I'm actually now since yesterday, so yesterday when I was talking, I only had about, the 3 active positions that I was telling you guys about, and then on MEX, and then the 2 Binance trades. Still in those. Actually, I've added a Binance trade and also did 2 other MEX trades. So a little overextended. Still not taking a position on this baby right now, but let's talk about what we see and what can happen. Coffee followed by water. Okay. Let's start off with the weekly. So what did we say yesterday? Okay, so yesterday we had charted out the support zone on the weekly time frame. That support zone was being denoted by the candle body open of the previous bearish candle prior to the rally up to test 4,000. Okay, so the open of the candle that established our low and the high of that candle as well. That range establishes our support zone. It is not. I use metrics that are not arbitrary when I'm looking to establish support and resistance zones. But remember, when you are looking at horizontal support and resistance and diagonal trend lines, you want to be drawing with a crayon, not a fine tip pencil, okay? Because the best laid plans of mice and men, as we all know. The chart does not care about the specificity of your beautiful, well-charted, well-plotted out line. We are talking about zones of interest, not absolute levels. This is why when I'm looking to buy on something like a Fibonacci retracement, I front run those levels. There are several reasons for that. One of the reasons is because I know other traders are going to be putting their buy orders at the actual Fibonacci level. I know other traders are also going to be front running as I am. So kind of gets into a battle, but you're pretty safe by doing some sort of standard deviation above it. Generally, to be quite honest with you, when it comes down to how much I front run a horizontal support resistance level that I want to buy or take profit at, generally, if you want to get technical, I go down to a lower time frame and I use a variance range of average true range. Or sometimes I just arbitrarily select a spot that's a little bit above. So for example, if I'm like, all right, well, looking right here, looking at this 8 weekly exponential moving average, I know a lot of people are going to have take profit levels set there, so I'm going to front run it here. Now I can go down to the hourly chart and actually establish, I'll make a line here, or actually I'll pull up in my data window and actually see where that number is so that it's not subjective. And then I'll put a horizontal line here, and then I can go down to the lower time frames, use average true range to establish a range around there of where I would like to take my profits. You can even ladder orders in that. You can even ladder your sell orders in that way. So, weekly chart off to a good start. Obviously, yesterday was a holiday, and as I said, I was not expecting to get confirmation of which way the market was going to go yesterday. I was right. The markets did have to switch into the next day before we could actually get anything going on. And my time, American time, we did have to actually wait until, thank you Europeans, until they woke up, decided to dump the market and then just buy. So we have not broken out of the weekly trading range yet. Still in that trading range. A big wick down on an intraday basis down to really clear out the liquidity. So we've had a liquidity play to the downside. Shorts have been cashed out. Ugly shorts that were definitely shorts that were anything above 25x leverage. Most likely the shorts at 10x leverage as well. So they have been cleared out. Excuse me, not the 10x shorts. They probably have not been cleared out. They probably just made it. Nitrodamus, thank you so much for the follow on Twitch. Also, let me go over to the live because I do want to give a shout out real quickly. That reminded me. Thank you so much for the recent subscriptions on YouTube that I might have missed yesterday. Astro Rev, Ives, Sandol, Paria Nick, JF Airplane, Jefferson Airplane. Oh, great song. Well, great band, good songs. Patrick Murier, thanks so much for the subs on YouTube, guys. Highly appreciate the support. All right, so on the weekly time frame, we have not broken out of the trading range yet. We just have not. So if you're looking for the higher confirmation of which directional trade to take, I know when you see it's a hammer candle, we're going to 5K. It's very exciting, but if you want to be consistent, you do have to wait for confirmation, all right? So weekly, we do not have confirmation of a trade. Looking at the Fisher transform on the weekly time frame, it is still positing in potential rejection from the neutral zone, has not broken above the zero line yet, and we also are looking, look at how squeezed the weekly Fisher has become. It's getting very squeezed, and it is going to put in a cross under if we continue on in this range. A cross under, a bearish cross under, rejection from the neutral zone, price unable to break the weekly trading range. This doesn't scream bull yet. Now, you have conflicting data because what do you have in price action? You do have a bullish candlestick forming on the weekly. The weekly candle hasn't closed yet, so you cannot act off that. You can't. You cannot look at unformed candlesticks that have not closed and say that, hey, look at this. The weekly candle is a hammer. I'm going to go long on the weekly time frame. You can't do that or you're going to get wrecked. Doesn't mean your trade might not work out, but it just does mean that you have no consistency in your trading strategy. Now, again, if your trading strategy is to wait for unconfirmed candles, normally here's where I'd say, like, that's fine. If you got a strategy, if you got a plan that works for you, I don't think that's fine. Honestly, in my experience, that does not work out. People who think that their subjective opinion is, that their intuition is just so good that they can see and think and feel how the market's going to move, those people tend to not make it that long. The only reason I'm still around and have been able to do this is because I understand fundamentally that I am dumber than the market, that I cannot defeat the market, that it is a massive, huge brute named Bruno, and I just cannot beat that dude down. Like, I've just been punched in the face so many times by the market that I realize, okay, guess what? I'm not strong enough to beat it. It is overwhelmingly powerful. This thing is like Cthulhu with a semi-machine gun, and I am like you take the analogy. So the only thing that I can do is use my brains and not my brawn to be able to capitalize on the market. And to do that, I have to be very consistent with a disciplined trading strategy. So I have to have full justifications for every trade that I take. I have to fully understand the trades that I take. I have to have an entry plan, an exit plan, and a take profit plan. And that's it. That's all I can do. And then I have to calculate, again, the trade, the game of trading is less of a sprint than a marathon, okay? Because in a marathon, all you have to do is last, all right? All you have to do is end up crossing the finish line. That finish line, hopefully for me, is at the age of 95 when I die and import my brain into a robot, moving on. But those who are looking at this as a sprint, as a foot race, they're not going to win out so well, because individuals that look at it as a foot race who are just focused on this trade and not the next 50 trades, okay? The next 50 trades are what's more important than any one individual trade. Any one individual trade is garbage. Doesn't matter. It wasn't your analysis that captured the profit. Okay, so let me rephrase that. It's not that it wasn't. It's just that it's not like you made that happen, okay? You know, there's an additional layer that has to underpin everything, and that layer is risk management. That is planning your next 50 trades out, planning your portfolio out to allow yourself room to grow and incur loss, because you are going to take L's if you're realistically trading. I don't know what you guys have heard. I don't know what you guys see on crypto Twitter, but anybody that purports themselves as, I just win all the time, I am the most amazing trader, I never take L's, these are no risk. I see that sometimes, because as a benefit to my subscribers, I do subscribe to about 10 premium channels, okay? If I see something good, I'll pop it in there. Normally I don't. But I see shit like that. Pardon my French. Oh, by the way, we're going to get a swear jar. Every time I swear, I'm going to put some Bitcoin in the swear jar. And once a month, we're going to donate that to a charity. I think me and Scott talked about that. We've still got to like work it out, like how we're going to do it. But yeah, we do need to do that. So we're going to get a swear jar. We might even like put the little thing on the screen, and then you guys will publish the public address so you guys can keep track and make sure we're staying honest about that. But all right, so I see that stuff like, this is a no risk trade. No, it's not. There's no such thing as a no risk trade. Again, as I said yesterday, when your stop loss gets hit, that's the fee that you have to pay to be able to take profitable position. All right, so let's get into the technical analysis. So have not broken the weekly range. The fissure looks actually the fissure is neutral, leaning toward bearish, because it looks like it's going to reject from the neutral zone. Hasn't given us, I mean, we did get the bullish crossover on the weekly time frame. The weekly fissure crossed over here. Okay. And again, waiting for the weekly signal on this would not have done much for you, because if you were just using the crossover feature, you would have bought here on the close of the weekly candle. Okay, great. Or you would have speculatively bought in when the actual fissure crossed over. There were other ways to buy in. Again, obviously, when you're trading above the previous high of your resistance, that's an acceptable time to buy in. So that would have had you buying in around here, right back where we started. So you would have been able to capture profit of 15-16%, trading on the weekly time frames. Again, this is very this is going to be very similar to TD sequential strategy, but TD sequential strategy takes this from just basic candlestick trading strategy. When you trade above the high of your resistance, or excuse me, so if you have a bearish candlestick, once you're trading above the open or high of that candle, the more conservative is to wait for the high, then you can enter into a trade. And you set your stop loss at the open of your current candle or the low if you want to be more aggressive. All right, so that is a good, well-tested, old classical chartist strategy, and that would have played out for you well here. It does incur risk because you are not waiting for confirmation. So just as I said earlier, it's risky and not extremely valid in my opinion when you put on a strategy like that. But if you want the basis of where that strategy comes from, that's it. I'll stop tapping the desk. I'm sorry, guys. All right, so weekly time frame not really giving us a signal. We are, again, if you're looking at the same thing, on the weekly time frame, we are trading above the close of the last week's candle. So this is a bullish intra-week sign. The volume's not super impressive. The volume was low on last week's candle. The volume was low on last week's candle. We still overall have descending volume in this consolidation range. Obviously, nothing has changed. Price is still range bound between 3 and 4K. And really, we're worried about stepping over dollars to pick up pennies when we're worried about what trade we're going to take in this range, okay? We are waiting. There's no positional indications on the like in the charts. There's not. The positional trade is the break of resistance and the test of previous supports. So that trade is the break of the $4,000 resistance range denoted by this weekly equilibrium block, and the test of previous resistance either at 5,000 or at 6,000. okay? 5 to 5,500, we can go down to the daily time frame, and that resistance zone becomes more pronounced, and we can target it more effectively. But on the weekly basis, we are looking to essentially gap trade through this LVN, and we don't incur resistance until we get to that $5,000, $5,500 region. That is the positional trade to take. Additional targets above that would obviously be the previous breakdown zone around 6,000 to 6,500. That's also where our current point of control is coming in right up there, around 6,393 on the weekly time frame. That's the deal. That's the positional trade. Breaking below 3K, I don't think is going to happen anytime soon, but the weekly open and close below 3K puts us down toward 2331. Actually, the range begins from $27.98 to $22.45, with the key area of interest for me in that range of $23.31.36. To be very specific, that's actually the 88.6 Fibonacci retracement of the weekly swing movement of Bitcoin, and is also the same Fibonacci retracement level where we bottomed last bear market. Does that mean the fractal is going to play out? No, it doesn't, but it just is a data metric, a level on the chart to pay attention to. Now, do I see that happening anytime soon? No. To repeat myself, I think that the liquidity below the $3,100 level is too deep. I think that it's actually going to be physically difficult for Bitcoin to break 3K. So for everybody that is screaming, we're going right to 5K and we're going right to 3K, you don't really know what you're talking about. You don't have confirmation from the charts. You're trading on your opinion. You're trading on your gut, and you're doing something extremely risky. Two things can be true simultaneously, cognitive dissonance. All right, so no indications on the weekly time frame. Let's go down to the daily time frame. Daily time frame giving us a little bit more information of what we need to do. However, we're still not really there yet, okay? Daily time frame, we do have this big liquidity hunt down to 3430, which was the previous support zone that I was talking about, also downside targets for a long. People had asked me, if we break this range, where would I be looking to accumulate? I said the first area of support is to front run this high volume node right here, and then to front run this high volume node down here. Those would be your two potential bounce trade zones where you're looking to at least scalp off them. Now, whether the position turns into a long-running long position that now you are looking for confirmation to exit, so previous resistance, divergence on the Fisher, overbought conditions on the Fisher, whatever you're using as your indication to exit the trade, moving average crossovers, Ichimoku cloud, whatever. There are many metrics for exiting a successful position, what things to look for. And that's the tricky part, of course, is always when you have a winner, when do you sell? Man. So we did actually a liquidity grab down to that support zone and buy. So congratulations to everybody that did have the balls to put on a long order at that area. Now that zone has been tested. If you see, we did have a previous point of control at that area. The point of control was front run. So the way that you would do this in reality, for me anyways, is to look at this zone above the point of control and to front run it. So basically right here was where the buys would have been. Now, I'm not a psychic. I did not buy here. Okay, so don't get it twisted. I'm not coming on here and saying after the fact that, yeah, I nailed this. I didn't. I don't have a position in XBT right now. I don't think I should. I don't think anybody should. At least on the daily timeframes for positional trading. There are scalp opportunities, which I'll get into. I'll actually talk about the scalp opportunities. Yesterday, I talked about two of them. Both of them played out. And then I talked about a long opportunity. We didn't get confirmation on the long. It didn't play out. You shouldn't have taken the trade because what needed to happen didn't happen. I talked about that. So this area has been tested. We now have a new level of support that has been tested and is starting the process of weakening. Now, what else do we see that's very interesting? We see an SFP, which is a swing failure pattern. So basically, we've put in a swing low. Price puts in a little bit of a bear flag formation on the daily time frame right here. This nice price contraction where we have volatility, higher volatility here and here. Price contracts, tries to make a volatile movement. And this is what you're looking for. When you see initial volatility, so look at the momentum on these two candles right here from the 12th of January and the 13th of January. And then you get 4 days of price contraction and low volatility. And then you get a big liquidity play to the upside with a long wick. that is a good opportunity. That is a good indication that liquidity has been tapped into, especially looking at rejection from the 21 EMA, rejection from a high volume node here. You just see that, price tries to gap trade through this area, but is unable to close on the daily time frame above that level. So you can wait for the daily close, and then that's a good time to go short. You're just betting. You've had an SFP here as well, where you've put in a swing high, and then price trades above your swing high, is unable to close above that high. That is a short signal. That's a classic SFP pattern. Now, typically, if you want to be a very efficient trader, you're actually looking to go down to a very small time frame and actually capture this in the moment. So this is a good example of an SFP right here on the daily time frame. We do have a swing high, and then price pulls down on high liquidity, shoots up, and you just trade slightly above that high, and you're waiting on lower time frames to see if you're actually able to close above that level. Often you're not, because this is just a quick spike up. That's where you want to be having your limit orders placed. So this is always why I say, especially in consolidation, but if you are looking to catch the tops and bottoms, keep in mind this is riskier trading, but if you are looking to catch the tops and bottoms, you want to be putting your limit orders where other individuals are likely to be getting stopped out. Okay, this is institutional order flow at play. Where are institutions going to be having their short orders placed? They're going to be having their short orders placed slightly above swing highs, because that is where retail traders have been trained to put their stop losses for their shorts, or excuse me, yes, for their shorts. It's also where longs are going to be market buying into what they consider a breakout. And more often than not, breakouts get faded. And this is actually the purpose of TD Sequential. Originally, TD Sequential was designed to fade breakouts. If you guys are familiar with Jason Perlman's commentary on TD Sequential, I highly recommend that you read his book on TD Sequential and Tom DeMark methodologies if you have not already. Fantastic book, as well as Tom DeMark's The New Science of Technical Analysis as well. Joel Matthew, thank you so much for the subscription on YouTube, as well as you. Poikaz? I think it's Poikaz. And Gaikus, thank you so much, man, for the follow on Twitch. Highly appreciate it, guys. So daily time frame, we are still in that weekly consolidation range, as I talked about yesterday, 35.50, 36.40. And if you recall, what did I say yesterday? I said if we closed the daily candle below 36, if we close the weekly candle, I said yesterday, go back and rewatch the tape. If we close the daily below 35.50, that was a bearish signal. The bearish play would have played out, not a positional trade. You are responsible for managing your own positions, but we did dip down to that support level that I was talking about. Popped right back up. Again, so multiple ways you could have played this, whether you were looking to just take profit on a short play down in that range, or whether you were just looking to counter trend trade and put a limit order around that range. Either way could have worked out. But right back up into the consolidation range, into the trading range right now. What do we see right now on the daily time frame? Current rejection from our from our fastest EMA, the 8-period exponential moving average. That is also giving us good confluence with our current point of control on the daily chart right here. So we do have this consolidation zone where we had lowered volatility. That area is acting as resistance right now. Now, that area is also, so basically this is the area that I'm looking for. So 3600 to 36 on the chart, I have 3640. Okay. This, as I talked about yesterday, actually, to compound on this, I had talked about the fact that on the CME charts, and let's actually go pull those up. So Chicago Mercantile Exchange, we had talked about, let's go down to the hourly chart so we can see it a little bit clearly. We had talked about how the market had gapped down and that gap had not been filled. The gap has now been filled after a steep liquidity play down. So if you think that BitMEX is manipulated, and manipulation is a relative term, look at the wick on Chicago Mercantile Exchange. That was a 3.37% wick down. So actually the movement of that was from the high to the low. I mean, you had a 4% movement in 1 hour. You do not see stuff like this very often. So even on the Chicago Mercantile Exchange, with traditional assets. So People, I mean, whoever is trading this stuff on CMA, just like on BitMEX or just like on Kraken, you guys should be in love. I mean, volatility like this, you just don't find this. And this is why I trade cryptocurrency, because I've traded options, Forex, stocks, equities, whatever you want to talk about. And as a trader, you're a slave to volatility. You're going to go wherever volatility goes. This is why Forex became popular, because of volatility. And then this is why crypto became popular with Forex traders, because of increased volatility. Now, volatility has picked up a little bit more in stocks and Forex. So again, going back and forth, but you're always looking for the market with the most volatility. But when you're talking about 2017, 2016, you could not find a better asset class to trade than cryptocurrency, and still very lucrative if you know what you're doing. I just spilled some water on my pants. So that gap did get filled. So looking at the CME chart here on the hourly, you can actually see that we're coming up above that same resistance. So the hourly chart, we do have the hourly momentum by closing above the 55 EMA. Have not closed above the main level that I look at. We have not closed above previous resistance, the previous breakdown zone. You can see it very clearly here, where price goes down below the 55 EMA, makes 2 attempts up to break above that point of control, absolute rejection, and gap down the next day. All right, so the markets are open. And let's go to a higher time frame on the CME futures and actually see what's going on. Okay, 4-hour chart, a little bit clearer for me. Up closing above the 21 EMA with our 55 coming down on us, which is also showing us confluence with our point of control. So we can get pretty excited, guys. We can honestly get a little bit excited if we're able to close the 4-hour candle above this range right here. So that's 36.10. That's 36.10. However, there's another way to look at this, and that is looking for the opportunity to enter into a short trade. This would be right here. Where would we be looking to enter into a short? Well, again, we have the bottom of the HVN. We'd be looking to front run it. We're trading into the HVN, and we're assuming that this area will act as resistance. Let's go back to Bitcoin to talk about this a little bit more clearly. So daily time frame, where would you be looking to take short positions? Well, you would be looking to take short positions at your first tests of resistance. You have about a 2% range stretching from your 8-period exponential moving average to your 21-period exponential moving average. Your daily range, your horizontal resistance level, is also included within that range, as is your point of control. So you have a lot of areas of confluence pointing into this area. And since the dominant trend is to the downside, what is the safer trade? The safer trade is to be looking for short orders placed right here. That is the safer trade. You do have to wait for confirmation. Again, you have 1, 2, 3, 4 levels of resistance here. Okay, so what do? You do not long resistance, you short resistance. If we break through those areas and close above them, then you can either A, aggressively enter into the breakout on a long position, or B, be patient, wait for the pullback, confirm that broken resistance acts as support, and then you can be more confident about setting your long trade. Also allows you to manage your risk much more tightly, because if you're aggressively buying into a breakout candle, it's often a candle on high momentum, meaning it moves a large percentage distance, a lot of pips very shortly. So where are you going to have to place your stop loss? Well, you place your stop loss under the low or the open, aggressive conservative preference really, of the candle that breaks the range. And if you're doing that on a big pump candle, your risk to reward ratio may not be in it for you. Now, when you wait for price to come down and retest broken resistance as support, you are able to establish your risk much tighter, because once you pull down and bounce off support, you're able to put your stop loss below support, or at least 1 ATR below support on the time frame that you're trading. That way, if you get a liquidity grab, which you will often see, you're not going to get stopped out. So, not overly excited yet for the long position. This is an attractive looking candle, but honestly, with the dominant trend behaving the way that it is, and the fact that we have not broken above resistance, I mean, there's nothing on the daily time frame for me to get super excited about. So let's go down to the 4-hour chart and see what we see on a 1 to 2 day basis. 4-hour chart, the same thing, looking very similar to the CME chart, honestly. Closing above the 21 exponential moving average on the 4-hour chart. That is your initial call signal if you're using EMA strategy. We do not have a crossover or anything like that. That's secondary confirmation. We have the 4-hour fissure crossing above the 0 line, so that is also a secondary confirmation of a long signal. Where is your resistance right now? You have resistance coming in around 36.13. There's your 55 EMA, also congruent with a previous point of control and a liquidity area, right? So we have this consolidation zone right here, this range right here. And also we also do have my daily resistance level, horizontal level of 36.40. So I had talked about this earlier. I think for me, and we do have to transcribe these, but looking at this chart, if I could short this chart, where would I be placing my short entries? I would be placing my short entries in this range right here. That's about a 1.5% range where I'd be looking to ladder sells. I would have my stop loss above this range right here. So just to give you numbers on that, and again, this is not the trade that I have on the table. I am going to calculate this more specifically for the exchanges that we trade on for the premium subscribers, and I do have to be fair to them. So if you want access to that information, premium.krakencryptocurrency.com. But that is the way that I'm looking at this chart. Laddering short orders between this area, stop loss on a confirmed break of resistance right up here. And yes, that's what I'm seeing right now. That's what I'd like to play. And also, we do see the falling momentum right here, but some decent volume on the 4-hour chart. So immediate market entries, not really what I think. I do just want to wait and see. I do just want to wait and see what happens. But just being honest, just looking at what the chart tells me, I mean, this is the area to be taking a short on. The dominant trend is to the downside. Yes, you've had a nice double tap of resistance, but all that implies is that, listen, so for all the ballers that bought right here, okay, for all the gangsters that got their limit orders filled right here, okay, do you really think that those are moon boys and that they're assuming this? That they only bought here for this trade, that this is their trade? Or do you think more than likely they're going to be quite happy with this trade? What do you think? And what are all the retailers doing who are looking at the price right now? They're thinking, damn, I missed. This thing's going up here. I should probably buy now. When really they should probably be, when all they're going to be doing is providing liquidity to the individuals that are looking to sell right now. So I'll give this thing a few hours. I'll give this thing a few 4-hour candles. I'll see if the 21 holds, see if we do actually come up here and test the 55 or our point of control. But yes, laddering orders throughout this area, man. Hey, GBU, Professor Wally, man, thank you so much for the $10 donation, man. Highly appreciated. He does say, first-time subscriber, really enjoying your analysis and thought I'd send a tip. Earn, learn, and don't get burned. Hey, thank you so much, man. I appreciate the support, man. You're one of the good ones. You're always welcome here, man. All right. Let's see here. Yeah, that's what I got for you guys for Bitcoin. We're gonna get into the other big cap coins, man, and let me slide over here to the chat, man. Thanks again, Wally. Highly appreciate it, man. Love that. Love your emoji too, man. All right. Actually, let me pull the chat over here so you guys don't got to look at the. I think last night when I was sleeping, I had a zit pop up here, and I'm in my 30s, so that's a weird one, man. That's a weird one. Hey, Eli back, man. Thank you so much for the generous donation as well. $5 to the super chat. He asks, can I please look at a scrub coin? BTC IOP. Yeah, sure, man. Of course. You support the stream, man. I look at what you want, man. Not a problem. Would you mind providing me some specifics? Would you mind providing me some specifics? Do you have an entry? Is there a level you're looking at to take profit? You know, that would help. That would help me. Could be. Thanks, man. Magic. My move. I use Fibonacci settings for my EMAs. I found that to be very, very useful. There are times I have in the past, and this is actually how one of the earliest strategies that I use. So your 21 and your 55, you have to have those, in my opinion. Those are my primaries. I have in the past used, obviously the 200 and 100 simples, the 200, 100 and exponentials are very helpful as well. But I find now that clutters my chart, and now that I'm more comfortable after several years of experience, putting more weight on horizontal support and resistance, that helps me. And again, I do not trade primarily based off the exponential moving averages. In fact, if you just go back a week, I really didn't have the exponentials on my chart. But I find after I've done some thought, I get a lot of novice traders in here, no offense to you guys, and exponential moving averages or something like Ishimoku is going to be very helpful to beginner traders so that they do have frames of reference. I do use them as secondary or actually tertiary confirmation of a trade. So I'm basing my trades off horizontal support and resistance, My secondary indicator is what the Fisher is doing. That's my momentum indicator as well as my wave signaler. More often than not, I'm just placing, I'm looking at psychological levels. What is retail going to do? Where's the price at? I'm looking at price action. And then for horizontal support and resistance, I'm using volume profile and actual horizontal support and resistance on higher time frames. And then the exponential moving averages do help with confirmation. So if price goes above a horizontal that I'm interested in, and then we get a crossover, or there's a resistance level there that gets broke for an exponential, it's just a tertiary indicator. All right, so let's actually, let me look at IOP for you, brother. Oh, shoot. Oh, yeah, the Internet of People, for sure, man. This doesn't, okay, this actually kind of looks interesting. Let's see here. So you said, Che Constant, man. I love you, bro. He said, okay, so Eli, you're trying to buy in at 33.70. Okay, so let's... Okay. Okay. Makes sense. Let's start off with the daily. Okay, so... All right, rule number one. Without a significant change in volume or sentiment, we are unlikely to see the trend change. Now, the trend has changed because we have put in a little bit, we have put in areas of significant volume resistance. So overall, this is consolidation volume. Price is consolidating at these lower levels, as it has been really since the run up. I mean, you just have to be honest. I mean, a lot of these altcoin charts looking like this are rough. And here's the thing, while we might be biased to think that, and let's do something real quick. So I do just want to take all the indicators off the chart and look at this in a bigger picture. While we might be biased to think that, well, look at how tight price has consolidated here. The reality, when I look at something like this, it doesn't seem an attractive place to buy just on the bigger time frame. So just looking at the daily, a lot of people are going to look at this and say, hey man, price is in consolidation. It just can't go any lower. Low volatility precedes high volatility. Don't you say that all the time, Justin? But I really would like to see, because I think a lot of these altcoins have good potential, but I would really like to see a resistance level get broke. Now, that doesn't mean there's not short-term opportunities here. So let's look at those short-term opportunities and let's actually zoom in a little bit more. Okay. Okay, so daily time frame. Let's look at really what's just going on right now. All right, daily time frame, price is in consolidation. How do we know it's in consolidation? Because price is trading within a high volume node. Now, if we look above us, we do have an opportunity. We do have a shallow area of the volume profile, and we don't really have significant resistance coming in until these areas. There's a first thing that I want to do. And the first thing I want to do is establish some profit-taking areas. And seeing as this low has already been tested, this low has been less tested. So this level is going to be more attractive to me when I'm looking for a take profit level, as is this level right here, because I'm going to be front running this HVN. And then what else am I looking for as well? I would also, well, let's see what that looks like. Okay, so we've got a 12% and a 24% trade on the table looking at those. I'm going to limit my analysis to those lower time frames as well, because we do not have another point of control until here. Another really significant HVN until here, where we do have steep price contraction in a descending channel. And so I would rather wait to see what price does here. If we're able to close above and consolidate above this point of control, above this HVN, then we just basically repeat what we're doing down here. We just look for higher targets. Let us establish where support is right now, which is this right here. Let's move that up a little bit. So we have support coming in right around this zone. Again, we're drawing with a crayon, not a pencil. All right. So far, we've had a double tap above the point of control. have not been able to close the daily candle above the point of control, and not a lot of buying volume. In fact, on the march up, really declining volume. That does not scream bullish to me. This actually looks, if you want my honest opinion, before I go further with this analysis, this looks like not a good time to buy. Now, you had said that you wanted to get in on the pullback. Okay, that is acceptable. I'm looking at the daily time frame, and what do we see here? We see the exponentials move up and get, they're not able to give the crossover above the 55. So we're traveling down a little bit. We're about to get the bullish 8/21 crossover. And what we would be looking for here, what we'd be looking for here is rejection from the 21, okay? Because we have a test pump of that zone. Two things I'll be looking for. Either the daily closes above the 55, closes outside of this HVN. All right, so I'm going to assign a value to that. So if the daily does close above 35.48, you're looking at a potential breakout trade. Okay, and you do have these upside targets. For me, 39.38, 43.71. Otherwise, yes, you would potentially be looking to not buy now because you don't long resistance unless you get confirmation of a breakout. So you do have this buy zone right here. I mean, really, to be honest, it's here. So between your 55 EMA, and your 21 EMA. But you want to wait and make sure that this level holds. And in that case, if this level does hold, so if price comes down and consolidates at this higher area, everything gets a little bit more squeezed, then you can potentially enter into consolidation trade. We're going to go down to our 4-hour chart to kind of get a good analysis. And on the 4-hour chart too, I do see this potential cup and handle pattern playing out. It's not really what I want to see for a cup and handle, but it could work out. So to figure this out, we're actually going to take a fib retracement. Let's throw on magnet mode so we can be accurate. What swing low stands out to us? Obviously, this one does. What swing high stands out to us? This one does right here. That baby right there. Okay, so traditional cup and handle strategy. We turn magnet mode off first because that's going to screw with my stuff. We're looking to purchase in between the 382 and the 50. So right here is where we want that cup and handle retracement. And we set our stop loss below the 618. So we're going to move our stop loss up. Let's see if we can port in average true range. So average true range on the 4-hour chart is going to give us 99 Satoshis. So if this is our entry zone right here, I'm actually going to take a median of it. So 33.95 is going to be our average entry. Let me do some math. So that's 0.1234, 33.95 minus 0.123456, 99. Sorry, that probably just blew out your goddamn eardrums. 32.96 would be your 1 ATR stop loss. 32.96 on the 4-hour chart, which is giving us confluence there as well. If you wanted to be more conservative, you would actually do you said you wanted to buy at 33.70, so 1,2,3,4, 33.70 minus 1,2,3,4,5,6, 99 Satoshis, 32.71. So you do have a more aggressive stop loss as well, 32.71. And why? What's the justification for this region? So you can also look at this as just your stop loss zone if you want. So that's going to be for me pink are stop losses, text, stop loss zone. And then feel free to use any of the specifics. And then we have entry zones. So my analysis does agree with you for entry. Again, I don't really want to call this a cup and handle. I'm not a chart patterns guy. Let us do see, though, if we get some confluence. So if we're looking for an equilibrium swing, that is going to be basically from swing low to swing high, looking for an equal distance. And so for that, we need to use a trend-based fib extension. So throw that magnet mode back on again. Yes, baby, go. Up there. And we're going to say average entry right there. Now for this, I do need to make a modification, style, and we're going to need to put in that 1. Okay, great. So if we're looking at an equilibrium swing, okay, so actually let's front run my initial target a little bit. Because I do see this equilibrium swing right here, and I actually want to front run that because other traders might be using it. So we do see the 0.5. I like that. That's front running the equilibrium swing. And again, an equilibrium swing, I got this idea from Icy Teeth. Shout out to Crypto Cred for introducing me to that. Is basically when you have a swing low to swing high movement, you're assuming that the next impulse wave is going to be equal to that as well. So we're going to move the take profit target down to 38.19. Okay. And then, of course, you do want to also be taking profit at your first resistance level. So we do have that coming in here at the top of our resistance, and I would probably front run that right here. So I see a nice 382 fib extension, so we'll front run that. So we have a scalp target in case things do not go as planned. Okay, so now that we've done this, I'm also going to go ahead and use, so we have the equilibrium swing. We have the full equilibrium swing here. So basically, from swing high to swing high, if this doubled itself, we'd be right here. But let's go ahead and use the 1.618 of our trend-based fib extension as a target. And I like that because that would basically be congruent with these wick tops right here. We also are front running this level right here, but we can go ahead and keep that there if we want. But yeah, I'm just going to slide this down and front run that level a little bit. So hopefully you guys see how I've done that. Okay, so now we've got some take profits. We have an entry zone that is congruent with cup and handle reversal, or excuse me, cup and handle pullback strategy. Also decent pullback strategy as well. We have a stop loss zone that is below current support. And we have a plan. Now, what is plan B? Plan B is... So plan B is going to have to be breakout entry if we're watching this. So breakout entry is going to be right here, a 4-hour close above this level right here. I'm actually going to have to be realistic about that. And it's going to be denoted by the actual highs. So I'm going to be more conservative. Yes, you could, there is validity to put it here. There is validity, I guess, to put it here. But we're so close to that that I'd rather do it here because we've got double rejection from that zone again. Now, this is a much stronger movement moving up, I mean, on the 4-hour chart, but very little volume. So yes, I definitely think that you're safer looking for that pullback. And then again, we are going to take that. Go ahead and just use 99 Satoshis for the stop loss, the 1 ATR for our breakout entry. So that's 1, 2, 3, 4, 3, 5, 9, 6 minus 1, 2, 3, 4, 5, 6, 99 Satoshis, 34.97. So multiple plans, man. Multiple plans. Again, that is going to be pink. All right, and that is going to be breakout entry stop loss. Okay, I like it. Yeah, you know, on the 4-hour chart too, you've got other confluence. That entry zone is coming up with your 55 EMA on the 4-hour chart. Yeah, I kind of like it, man. I kind of like it. Now, I mean, listen, if you want to throw in like 10% of a position here for a market entry, that's okay. Just make sure that you're calculating your position size based off how much money you have and how much you're willing to lose. So for me, whenever I look at a trade, my risk percentage is 3%. So if a trade doesn't go my way, I lose 3% of my portfolio or my trading account. And that way I can take 10 losers and only lose 1/3 of my account, as opposed to having no risk management strategy, having 2 losers and being broke, which is kind of my goal to help people avoid. So I've had the chart down for a while, man. So hopefully hey, Diego, what's going on, man? Okay, bro. Hopefully that was helpful. I'm going to go ahead and entry zone, stop loss zone, breakout, entry, stop loss, breakout, entry, and then, yes, take profits, take profits, take profits, take profits. Bananas, 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 bananas. Okay. All right, so we'll go ahead and publish this for you, Eli. IOP, BTC, Internet of People, potential trade setup, chart, long, trend analysis, chart pattern, technical indicators, bloop, 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 bloop. IOP, Internet of People, IOP, BTC, cryptocurrency. That'll be on the tweeter. All right, there we go. I'll go ahead and drop that in the chat for you, my man. That'll be in the Discord as well. And here. Bam. All right. Sounds good to me. Hopefully that was helpful, man. Good luck to you. Best of luck. Gui Laum, thank you so much for the sub on YouTube, my man. And Chev Shellyaspol. Woo! Thanks so much for this, for the follow on Twitch, man. Highly appreciate it. All right, guys. What's next? All right, it's 1:06. We're an hour and 6 minutes into the show. I've run out of water again. You know what that means. It's break time. I'm going to take a quick 3-minute break. I'll come back. We'll run for another 45 to 50 minutes. We will look at Ethereum. I will look at Ripple. We'll look at ZERP. So sorry. XRP is not Ripple. So really to look at Ripple, we have to look at profit statements from a company called Ripple. But we'll look at ZERP, which is a cryptocurrency. So we'll look at ZERP and we'll take it from there, guys. Open to taking requests. Let's scroll through the chat super quick, man. You know, BTC buyers, should I cover a profitable short to get in higher on XBT? Yeah, we do, man. But, you know, we're just coming up to that resistance zone, man. Oh, so I see what you're saying. So profitable short here. No, there's no confirmation for that yet, man. There's no confirmation for that yet. I mean, it depends on how profitable your short was, but yeah, if you're profitable here, if you're profitable here or here, excuse me, there's absolutely no confirmation to switch yet. The time has passed. And I'm not saying that we can't, again, don't possess a crystal ball, man. I threw mine away a few years ago because the batteries fuzzed out and they only sell them in Narnia. Yeah, like if we get above the point of control, if we get above a 55 EMA, yeah, then we can start talking, get above previous resistance, or excuse me, support broke down. We're just retesting this zone, this previous support zone as resistance now. So, you know, we can just shoot up to 5K. Of course, it could happen, but I don't see the technicals to confirm exiting a trade. Now, the volume's nice. The volume's nice follow through. So we will, this is something I'm going to be watching this pretty closely, but I don't have a trade in. I don't have a trade on XBT. So, all right, guys, I'll be right back. If you guys have any questions, feel free to pop them in the chat, man. with audio now this time. Sorry, now we're back, guys. Yeah, Vechain taking a nice run, man. So I believe the last time we looked at this was yesterday. Again, the show runs from noon to 2. So yesterday, right here, people were talking about buying into resistance. Price did pull back, found some support on the hourly 55, Basically, also, if you look at this, came back and found support on your previous breakout zone, found support on previous resistance, found support there, and just went to the races after that. So multiple confirmations of an area to enter here. You actually have two opportunities. Price goes back up, pulls back to come back and tell you like, yeah, buddy, guess what? We are doing this thing. And then you also have a breakout right here where price does end up closing an hourly above your resistance as well. You have multiple opportunities in there. So good breakout zone right here. Basically coming up, this chart hasn't changed. This was a long-term analysis of Vechain where I talked about two areas to enter. I did two analyses. So I did a double bottom area. So back when price was around here, I talked about the current consolidation area entry. I talked about the opportunity to enter on a double bottom, which eventually, if you would have been patient enough, price did come back down and broke into this range just barely. You'd have not gotten a majority fill, but you would have gotten a partial fill, which would have been nice. Now, I don't exactly know why. Oh, never mind. That does make sense. So just shy of ultimate target. So actually an equidistant retouch of local highs. So that's interesting to see. Not quite an SFP. Actually, let's go in and check. Let's throw on that magnet mode. I'd like to see if this is SFPing right now. Nope, pretty much perfect. So whoever had their limit orders right here just kept them on the books and smack dabbed them right there. So trade almost successfully completed. So that was the long-term trade of the Vechain. But the buy-in right there, what were you looking for on the hourly? Again, when did we talk about this? Yesterday at noon, price pulled back, found support or support at resistance, however you want to look at it. But previous consolidation range held and then moved back up, broke above your current resistance. That's a nice bullish call signal right there. It does end up closing, and then you get this. You get this nice little 4% play. So the opportunity loss, or really the trade, the drawdown was 3%. If you had entered there and not listened to me, the upside was 8. So good little trade there on Vechain, pulling back and finding support on that 8 hourly as well. So you're kind of in the same position. You're kind of in a position where you've had falling volume on this next movement back up. Let's take a gander at our Fisher and see what Fisher's telling us on the hourly. Do we see any little baby divergence? Nope, not quite. We don't see divergence yet. If we bottom above the 0 line right here, we could get another little push back up here. Again, it'd be nice, just for my analysis, if my target did get hit. And then we do have upside targets above that as well. But nice little run Vechain's put in. I do have to I do have to point this out though, again, just as we said yesterday. Big volume spikes like this at the top of an uptrend scare me, because this is when retail starts to pay attention, realize that hey, this coin might be mooning sometime. And I just seen the same comments in the chat, fear of losing out. Generally, and I'm sorry guys, I'll stick to the same thing. When you're buying into resistance, it's a tricky play. So yeah, was the opportunity there? Yeah, absolutely, man. Am I right about everything? Not all the time. Price did pull back. You had some indications here. I didn't pay attention to Vechain as I should yesterday. I just was super busy yesterday, man. And I generally pay more attention to MEX than I do to spot alts. But congratulations to the people who took that trade, man. But yeah, my opinion on this doesn't really waver. I still don't think this is a good time to be buying. You now have more historical resistance right now, and Vechain has been unable to break out of this higher resistance zone since back in November. I mean, we've had multiple stabs, multiple attempts up at it. So this looks like a good time to exit. And if you're unhappy with those profits, that's absolutely fine. If you want to let them run, that's on you. It's all good, man. Like I said, I do have upside targets, but to be excited about upside targets, I want to see breaks and consolidations before movements upwards. Generally, price does not just go directly up, especially if you look at volume as a sense of the urgency of buyers, because that is really what it's measuring. If you look at volume as the urgency of buyers in the marketplace, okay, look at the urgency of the buyers in this zone right here. And tell me if you think that there is enough buyers on the sidelines right now to be able to push price from here to here, or do you think there are more sellers that bought here and here and here and here to be able to push price from here down? So what level stands out to me as an important level? Well, let's check. Yeah, so basically right here, you have your 382 and your 0.5 at the very top of your consolidation range right here. And then you have your 618 coming right in at the median zone right there around the median zone of that initial consolidation of this entire range. So areas that I'd be keeping my eye on for a pullback if you wanted to be more aggressive and you were just measuring the local swing movement, you would be looking at something like this. Yeah, so here your 382 and your 50 are actually front running much better, and your 618 is right above the breakout zone of this range right here. And then we also see confluence on the upside targets here with our fib extensions as well. We have the equilibrium swing taking us up to 147 satoshis. We have the 382 taking us up to 135. Let's talk about, I wanted to get to that comment in the chat, man. Took the trade as a gamble, man. It's all good. Okay, a couple questions, a couple things I want to get to in the chat. So, Professor Wally, did I already cover the Litecoin death cross? No, I didn't, but what I will cover is why I exited our Litecoin trade yesterday. So, Alex and I had been in a Litecoin trade for a while, LTC H19. And this is what we saw yesterday. So let's see here. So last night when we were looking at it, so this would have been, yeah, between right around here. Yep, right around here. So we saw a few things. Oh shoot, we need to take all that data in there. All right, great. So we get the right. There we go. Okay, so this is what we saw, or what I saw, and Alex agreed with me. So we had entered the LTC trade based on factors that I won't get into. Obviously, we got a lot of stuff. We get the crossover right here. We get the 8 above the 21. We get breaks of local resistance. We get some nice volume coming in here. Anyway, so we hit 2 of 4 take profit targets, ultimately looking to retest this zone right here. And then we exited last night after we saw a few things. We saw price come back down from that high, consolidate, have another thrust up on low volume. And then we saw this. This was the big thing. The 4-hour rejection from the neutral zone on the Fisher transform. The inability to make it above and close convincingly above either the 55 EMA or the point of control trade. And this let us know that on this trade, this would have been a good opportunity to exit at a profit, because had we not, we have definitely gotten stopped out because, again, not planning for this. So we took our profits on the trade that was entered in this zone right here after taking profits up in this range right here and then exiting the trade successfully near take profit 1 in this zone right here. Don't really have an opinion on it right now. Again, my similar bias toward XBT right now. You know, as I said, yes, look what just happened. Now we're getting that nice little bit of sell volume right there, that sell pressure, inability to actually, we did actually pump up just now and test the 55 EMA and that point of control. Again, a little bit of a blow off top volume. So kind of the same thing that I said, man. When I see stuff like this, it makes me nervous. Now, if price consolidates in this range and these EMAs tighten up and we retest this point of control a little bit more, then you start being excited about a breakdown. But when you see something like this and price has just come up on the first pass through, this is BTC's first test of the point of control and the 55 EMA for quite a while, which we broke down from right here. So the first pass through, the first time we come back and retest resistance, you expect it to hold. So you don't long that resistance. Now on the 3rd or 4th test of resistance, that's when you can look at taking a pre-breakout trade, but definitely on the first pass through. You're being very undisciplined if you try to long resistance. Because this is just how most retail traders think. They see a movement like this, they're looking at price right here, they think they missed it, they're going to FOMO in, and all they're doing, as I said earlier, what makes more sense to you? The gangsters who filled up their bags right here, do you think this is the trade that they're planning for? Or do you think this is the trade they were planning for? What's more logical? Let's see. K7 Jixer. You have the, let's see here. The Bitcoin bears have been a godsend for all BTC pairs in early 2019. Hope to keep pushing BTC price lower as alts gain market share. Right on, man. What are my settings? What are my settings? Yeah, Doji forming on BTC, and I'm sure one of our traders, Fibonacci, is very excited about that because that's what he was talking about earlier in the chat. What are your settings on the volume profile, and could you explain how you use it in your tradings? Yeah, sure. So my settings on the volume profile look very simple. They look just like this. My inputs, I use number of rows, 120. You can use 100's a good one, 150. I don't really like to, I don't really like it. I see some people who have like really, you know, like who use like 250 or something like that. The idea here is I just find, you know, 120, 100, 150 is just a nice balance for me. Again, this is just more subjective. You can use ticks per row if you want. You want a smaller number if you're doing ticks per row. But see, you know, something like that. Just whatever gives me enough data that I can actually act off. So, you know, I can have enough clearance on bars so I can front run HVNs, value area 70. I've just changed a few things for aesthetics to remove data that can interfere with my analysis. Again, I make candlesticks white and black so that I don't have, and I got this idea, shout out to Hayden. Well, there's a lot of other people that do it too, but he's the one that really brought it to my attention, and I adopted it that way so that I can remove emotional contaminant in my mind. Because people, traders, they see green candles and they want to FOMO in. They see red candles, they want to panic sell. So changing them to a neutral white and black does help psychologically me approach the charts with less emotional involvement. And then again, you can also just, you know, looking at the up down volume, like how useful is it really to see the differentiation between white and black? So that's another thing. You could change this to all white to all black. It's just my personal preference. I also have point of control and developing point of control on. So I use point of control as my primary area of support and resistance. So if price is below point of control, I'm bearish. Like I have a fundamental bearish bias. If price is above point of control, I'm fundamentally bearish as well, especially if I find confluence with EMAs, especially if I find confluence with Fibonacci levels. It's a primary indicator for me. So price action, primary indicator, actually, excuse me, secondary indicator. So price action, primary indicator. Volume and volume by price, secondary indicators. The Fisher transform, which is my oscillator, and my EMAs to help give confluence to everything as well, are going to be tertiary indicators. So in order of importance, what's the most important thing? Price action. What's the second most important thing? Volume. What's the third most important thing? Confluence with my oscillator and my EMAs. Another thing too that I would actually put in the primary category is fundamental aspects like market depth ratio, the bid-ask sum, longs to shorts ratios. All those things are extremely helpful, but those fall more into the fundamental aspect of trading and less in the technical analysis aspect of trading. Let's see here. Alessandro, thanks so much for the sub on YouTube, man. All right. TRX BTC, looking at the Binance chart. Let's go ahead and hide that. So kind of the same thing here. Kind of the same thing here as well. I'm looking for short opportunities on a lot of these things as well. And while I will not get into the specifics, because that would be unfair to the subscribers, what I can say is just give my analysis as follows. Price contraction on the way up. We have weaker volume, a falling volume here, falling volume on this entire movement up. We have a nice upthrust right here. We have a weaker upthrust right here. The urgency of the market is still to the bulls, but the momentum is falling out. Actually, if you look at this upthrust right here, followed by these weaker upthrusts right here without a significant healthy pullback on this movement, currently holding all the exponentials actually. So the exponentials are all bullish. They actually have been bullish since right here. You get that initial buy-in signal right here. So you've been able to ride this so far. You don't have the exit right now, but looking at other aspects such as the falling volume on this area, the consolidation in this range, what would be interesting to watch, I guess, would be the area to keep your eye on right now is if you're able to, since we only have these horizontals to play off of, is this zone right here. If we are actually able to, you can see how we're actually getting rejection from this limit area right here. So we have these highs, and if you form a range from these highs, that's where our current resistance zone is right here. So that's also congruent with where our LVN is. So if we're looking at our LVN, the way that you do see stop loss hunts into LVN territories as well, you do see stop loss hunts in LVN territories, because remember, this is where traders are going to have their stop losses placed. Again, we are looking at spot price, but just keep that in mind. So this isn't going to apply to the short side. You'd have to actually incorporate this over to TRX, and still like a 60 tick discount for TRX H19. So next zone to keep in mind, just on a horizontal basis, is obviously the open and close of this candlestick pairing right here, where you did get the blow off top rejection. So one thing to keep in mind too is, why is resistance resistance? Because you have a lot of trapped traders in this zone right here. So as price comes back up to this area, it becomes difficult for this resistance to get passed through. In fact, actually this area where you actually have all the trapped traders exiting their positions. So this is everyone that's either bought in here or here or here. It doesn't really matter where they bought in. But we have a lot of trapped traders up here. And then this is basically when everybody decides that this uptrend is finished. We're going to sell. It forms price contraction with a falling wedge. We do actually get the measured movement of that falling wedge, and now we're back up to the top of that falling wedge. So kind of critical zone right here. If we're able to close, this is an area to sell for me, if just based upon the fact that we don't have any more metrics to go off of. If you're trading a momentum, the momentum is to the bulls right now, but you have to look at where you are in relation, because if you rely on the EMAs to get you in and out of positions, you're going to suffer lag. So the EMAs would have had you here, as opposed to, there wouldn't have been a really good place unless you went down to a lower time frame, honestly, because you would have had to wait for this candle to close to get confirmation of the break zone, which is pretty much the same thing, where you do have the EMAs test the 55 and you hold up there. So the close of this candle is where you would have been entering. And looking to exit now, you're up about 15%. And where are we at? We're right back at the top of our falling wedge. We're also right at the top of the HVN. Doesn't seem like we've been able to close above that or open and close successfully above that either. Next area that I do want to keep my eye on for rejection, if that does happen, is 798, although I can actually be a little bit more honest about that. So 794, because that is going to be the open and close of these candles. I do have to see these trapped traders. I do have to see these trapped buyers. Again, looking at this, I would be fairly confident that this does continue to hold as resistance. I don't see any reason why it wouldn't, because you have a lot of trapped traders here who have not sold yet. And if price goes back up to this level, those traders are going to be looking to exit their position at break even or a slight loss or profit. So a slight loss for these guys, maybe a slight profit for these guys, but it doesn't change the fact that not psychologically, but actually physically, literally, you still have a lot of trap traders who have not exited their position. And a lot of trap traders who are willing to sell here, because this is the beginning of this downtrend right here, to form this price contraction. So significant resistance right here in my mind, as well as this area right here. So this zone right here, still a sell zone, still gives you about a 5% area to get over. Let's keep our eye on this on the 4-hour chart. Actually, let me take a bigger view, excuse me. Kind of want to see how the Fisher develops here. Not yet getting any bearish divergence yet. Just oversold conditions. Overbought conditions right now. So really the first sign of weakness would be a 4-hour closing below the, opening and closing before your 8. I think if that happens, then at the very least, you're going to be coming back down to test this area right here, which was your breakout zone. So we'll see if the 55 can hold us up, and then we continue up to move to our next resistance zone, or if it does break down. But again, and I know like I infuriate people, but this is just the reality of the situation. Buying here does not make a whole lot of sense to me. I don't long resistance, I short resistance, and I long support. This makes sense to buy. This makes sense to buy. This doesn't make sense to buy. This makes sense to sell into. Buy low, sell high. You don't buy high and assume price will go higher, in my experience. Remember, the majority of breakouts get faded. So, where is Bitcoin at right now? So, we had the support of the range, 3550, the resistance of the range, 3640. Four-hour chart, wicked up to that 55, rejection from it. We do have this entire HVN order block right here. We've got about 22 minutes and 46 seconds for the close of this candle. Did just put in a very nasty doji, but it didn't turn black. It only turned black momentarily. We do have a few people trying to buy the dip, assuming the close above the 21 exponential moving average. So let's watch this. This is what I'll be watching today. I will be looking for that 4-hour close above the 55. Listen, here's the thing, guys. I don't like to be the last one to a party. And if you weren't able to buy low, I don't really see the point of buying higher, especially with the shape of this candlestick right here. I mean, we just talked about this. We have the 55 EMA. We've got the point of control. We've got the horizontal daily resistance level right here. Excuse me, actually the weekly, my bad. So these are weekly zones. And we also have the previous resistance, or excuse me, previous support, which has not been retested as resistance. So the first pass through, you're going to have to explain to me why it makes more sense for Bitcoin to break 4 resistances on the first go than not. And of course it can happen. I'm just talking about the trade setup that I would like to see. I like to see resistance get weakened before even thinking about buying into a breakout. Now, if we get a confirmed breakout, 4-hour close above at least one of these resistance levels, point of control, 55 exponential moving average, weekly resistance level, consolidation zone, previous resistance untested as support. If we get a 4-hour close above one of those things, okay, cool. I'll start looking at some upside targets. Until then, my initial analysis of, as I said at the beginning of the show, targeting this area for short entry is more impressive to me, makes more sense to me. Tron may keep pumping due to the airdrop. They may just go gamble it on Tron bet and lose it all on Moon. 12-hour BTC. Sure, let's look at the 12-hour. All right, 12-hour BTC. Here's what stands out to me. I mean, really the same thing. 12-hour BTC. The wick from the 21 on the 12-hour. The 21 exponential moving average, congruent with the point of control, congruent with the previous support untested as resistance. You've got your 55 up there higher than you, which is actually where I would have a stop loss for a short position. Dun, 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 dun. About to get that Fisher cross up to the upside, the bullish call signal. What are you seeing, man? Let's go back down to the 30. A little bit of distribution. Stop loss hunt. Yep. Looking like a breakout, man. Time to gamble for me. I feel you, man. It's all good, dude. We're all in this together. I'm going to gamble to the opposite side. A breakout for me is going to be when we're up here. This looks like a retest of the first test of resistance. And I mean, really, I mean, this was, you already had a 1% scalp. So the better trade, the better trade is if you've missed the perfect entry, is looking for your first level of resistance and looking to short it. Short resistance, long support. It's a basics to really, it's not sexy. It's not sexy. And I know we want the sexy gambling, man, but it is what it is. Let's go take a look at Ethereum. Let's go look at our beater in here. I'm not going to lie, man. So Ethereum actually looks pretty darn sexy to me, man. I'm not going to lie. There's a couple of reasons. I mean, listen, moving averages and as far as resistance goes, I can't enter the trade yet. I do got to wait for the confirmation. Price is right at that median zone, held the 618. We've got a double tap off that 618 retracement of the entire swing movement. And it just, I don't know, it just looks sexy to me, man. So, a 618 to the 236 level makes sense to me. Now I got to see the daily close above this point of control. I got to see the daily close above, I prefer to see the daily close above the 21. Of course, that's going to put me with the less profitable trade, but it just makes sense to me, man. ETH looks nice. The only other thing, though, is this rejection from the neutral zone on the daily chart right here. So I have to weigh this, and again, the reason why I'm not going to jump on this right now is I have to weigh this against what I'm seeing with XBT. And from what it looks like technically, you do have to be realistic that XBT is giving it a nice college try, but it just has not put in the necessary performance yet, man. It just hasn't. This is an impressive movement, man. So big congratulations to anybody who was able to take this monster of a trade, that was able to have the balls to set their buys below stop losses. And this is a pretty wicked double SFP, right? So you have a swing low, and you retest your swing low, and you come up, and then you just dump down through. So the one thing to keep in mind is it's much harder to go up. It's much easier to go down because we've been weakening these resistance levels for quite a while. And when you start seeing massive wicks to the downside, you see it a few times right before a breakout. It's a stop loss hunt to grab liquidity. You start seeing it 4, 5, 6, 7, 8, 9 times. It's support being weakened. Right? It's the weakness, it's the strength of the bears. It's the bears testing the water. So it's 145, guys. Sup, guys. Hey, Con, good to see you guys. All right, guys, it's 145. I want to go get some early lunch. I'm starving. I'm sure there's probably a lot more exciting things to talk about. Let's take a quick look at some let's take a look at the bid ask sum. So let's look at the bid ask sum. Let's start off with Finex. All right, bid ask sum looking quite bullish on Finex. Bid ask sum on Coinbase looking bullish. Let's go look at the bid-ask sum on the good old BMEXI. B Mexicano. Bid-ask sum on BitMEX, a little bearish, but the bullish side is rising more than the bearish side is rising. So this would give you a fundamentally bullish side, but let's contrast that with the technicals and wait for Bitcoin to actually break resistance level. Again, if you want to gamble, it's all good, man. But for me, since I am more conservative of a trader, that's why I'm still alive. That's why the bear market didn't execute me. I'm gonna wait. I'm gonna be patient. Like I said, I've got about actually 7 open positions right now. I'm gonna nurse those and let those play out. And I'll wait for Bitcoin to give me a really strong signal. Again, didn't have the opportunity to get in on this entry, and those are the plays that I like to make and that I want to look out for. So for me, this looks like the good opportunity for the short. I just have to stick to my guns. You know. Now, if it gets unconfirmed, if we break some resistance, all right, cool. We'll go that way. I'm not trying to beat the market. I'm trying to love the market. Trying to go in the direction of the market. Trying to love the market. Trying not to do anything to make the market upset. You know, if the market wants me to go down and get some Midol, I'm going down to get some Midol. I'm on my way, right? The market needs a back rub. You know, it's on. All right, guys. That's all I got for today, man. Oh, yeah, I didn't really talk about ZERP. Didn't I talk about ZERP? I thought I talked about ZERP. We'll look at ZERP real quick, man. And then I'll leave. But yeah, I got to bounce out. Ich bin müde. All right, yeah, so Ripple pretty much did. So this is actually, let's go. I got my STFs over here. Okay, so I got hedged positions on ZERP, but ZERP on the 4-hour chart doesn't look super fantastic. As I said with ZERP USD yesterday, dominant downtrend, okay? Downtrend hasn't been broken. Last night, I got interested. I was paying attention because what do we see here? We see price contraction. We get the 8 crossing over the 21. We're getting real close to our 55, but it didn't happen, man. We pumped up to the point of control, got rejected, didn't hold, fell back down to support. Now we're just waiting. It is a higher level of support. The volume isn't there to have a full capitulation. It's not there yet. So what's interesting is that if it does not go my way on spot price, I take a small loss. But we slide on over to the XRP H19 contract. If it goes down and bottoms out here, or excuse me, blows the bottom out, then that's a lovely thing to see. So don't have confirmation. That's why I'm hedged on this. So just being honest and realistic with ZERP. ZERP doesn't look really fantastic right here. Has not been able to successfully or convincingly break a support level. What I will say though is that we had this nice little test, right, where we got the 21s real close, where we got our EMAs real close. Price really wanted to do something here, but it came back up to the previous consolidation zone, rejected from there. Now what we need to keep our eye on is if this lower high forms. Again, when you put in a low, again, we sweep all the liquidity here, right? So we have put in a swing low, we come down and form another swing low. So we come down and form another swing low, price comes back up to test resistance, comes back down, forms a higher low. That's often what I look for if I'm going to see a breakout, because it means that we did a test of resistance, we pulled back more support than the previous swing low. And if we retest that resistance again, it's been weakened by this upthrust. We're clearing the sell orders out of the books. But what I really am going to need to see for XRP, for ZERP, is a close, a 4-hour close above the 55. For me, really preferably above this point of control. That point of control coming in around 9039 Satoshis, 9,039 Satoshis. Right now, the area that is my, let's actually throw this on the chart. So my warning zone right here is going to be 8790. So the reason that's a warning zone for me is because that means this trade that I've put on, which the details of which are available to premium subscribers, that invalidates that trade. But that also is nice because it validates my hedge, which is actually going to be more profitable if it works out. So either way. So don't really, ZERP is not showing signs of a breakout yet. ZERP has not broken the overlying downtrend. The only thing that stands out to me is this potential higher low. Now, this actually does have to become a higher low. 4-hour Fisher crossing below zero. Let's look at the daily chart and see what the daily is trying to tell us. Yeah, the daily actually has us having extreme price contraction. The Fisher topping below zero. Let's see. Do we have any? We've got a little bit of a bearish divergence here, but in reality, yeah, there is a little bit of bearish divergence on the daily chart, but you have to couple that with the fact that if you look at the daily, you know, ZERP has been holding up, has had the daily momentum for a long time. I mean, look at this. Ever since we have the tether pump, we pull back down, we do a fake out of the 55, we hold that 55 for a very long time. But look at what we're seeing now. We are now below the 55. We've pulled up, rejected from the 55, and moving down. So more than likely, I'm going to go ahead and slide on over. Since I did this morning, I'm going to go ahead and slide on over and increase my position on my hedge and let this figure out what it wants to do. Because on the daily chart, again, the volume is not massive for the breakdown, but just look at what we're seeing on the daily. We are being held up. The 55 is our support zone. Every time we come, let's just bounce, 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 bounce. Now, what's happening now? Something new. We see something new. We break down, pull back up to test. It was just a fake out. We're just going to keep going, right? No, man. And you're also getting the 8 to the 55 cross down right there. The 21, which is my death cross. That's coming right now. That's coming next. So you get the death cross on the 21 below the 55, coupled with this rejection from previous support. Doesn't bode well, man. Doesn't bode well. Now, we've still got this HVN to break down through. That's why I have my line right where I have it. Because what do we see below this level? I'll do it one more time for the guys, for everybody who missed it. Okay? There's nothing there. There's nothing here. Obviously, you do want to take your first target right here at these swing lows because you do have a little baby bump. Like, you know, maybe she's like 3 months along. Little baby bump here on your HVN, on your volume profile, excuse me. But you don't have really anything significant coming in until right here, which is a little bit of previous resistance. So yeah. So ZERP, the potential of the downside is much greater than the potential of the upside, so just being honest. But I'll just go ahead and keep my hedge open. It's just the way I trade. It's what I do. It's the way I trade. So lose on a spot trade, not a whole lot because I was able to get in on dips. So lose on a spot trade, win on a hedge trade. Works for me. Sounds good. But yeah, just being realistic, ZERP doesn't look fantastic right now, man. Hey, Mobius378, what's going on, man? Johnny Ace, thank you so much for joining us today. All right, Con, yo, bro, you get the wrench, man. Yeah, super quick, man. I've got my chart over here. Get rid of the fibs so you guys don't see how the sausage is made. All right, yeah, so the last trade that I took on Ethereum Bitcoin was the breakout trade right here. I talked about that at length. Hit targets quite beautifully. That was nice. Now, do we want to get, let's look at Ethereum Bitcoin. Do we see the same thing? Let's look at this daily chart. Do we not see the same thing that we were just talking about? So we were looking at Ethereum USDT on the 4-hour chart, and I was talking about this thing looks pretty attractive, man. We have obviously a big change in volume, right? I said without a significant change in volume or sentiment, the underlying trend is not likely to change. I feel that we have seen that with Ethereum. I see that we have seen a significant change in volume and sentiment. These do look like good areas to me. So this is the 618 Fibonacci retracement. We do have the point of control below us. At 0.031372. So let's just say 0.031. All right, let's say 0.031. So that's the support that we expect to hold. It is also the breakdown zone. So before we went into this scallop formation, and this was really where we broke and got excited, for the first touch, because you can see that it's also where we pull back and test as support. So this is a very important zone right here. It's also, you can see HVN consolidation area right here. So very important zone right here. I would actually, here's the thing that bugs me about ETH BTC, and this is why I like our trade on it that we took. If you look at the daily, man, you're getting this nice little pump action, man. I know everybody's really excited. I really think you guys are going to be making mistakes if you're going long on a lot of coins at these points in time. I really, really do. I'm sorry. And I think that in the macro, you're going to be good. In the macro, I think you're going to be all right. Ethereum does look like it's at a good level. But longing now before we get above resistance, because exactly just the same thing that we just saw with ZERT, man. So we come down, look for the 55 again. We break the 55 here. We hold the 8, which is pretty goddamn bullish. Hold the 8, break the 8. This is your sell signal right here. Break the 21. This is like warning. If you're in the trade, get out, asshole. Oh shit. Damn, 2 in the swear jar. That's 3 today. Not bad. Not bad. 1 throughout the whole show and then 2 right at the end, because I'm getting tired. It is what it is. Bounce off the 55. You get that nice little scalp trade right there. And then what do we have? We have a breakdown on the daily below the 55, below the point of control. We have price testing the breakdown zone as resistance. And until we get above, we have to assume that we're dead in the water. Now, where are we going to go below that? Sorry. So that point of control is actually not valid. I apologize about that. I was zoomed in too far. But we also got the death cross that's coming in on the EMA as well. So what is more than likely to happen? More than likely, we come back down here to support. If support doesn't hold, then we start looking at lower targets. Let's take let's look at our Fibos. Yeah, so that's 618. That 618 is the point of control. So beautiful zone right here. You can try to front run it right here, because I feel that overall, I feel that this area is more attractive. That this area is attractive. I think that there's good upside potential here, but longing right now is scary. And it really, you have to be honest, like until we get the benefit of the doubt, until we get back above that 55 EMA, just realize you're catching a knife. And I'm comfortable with that because I'll catch knives with certain parameters. So we've got the EMA coming in right here. Let's look at, oh shit. Let's show actual ATR. Okay. Actual ATR 00152542. So what is that level? Ooh, that smell. Smell of gas around you. So 31496 minus ATR, daily ATR. So 152542 gives us 2997058. Boom. Yep. So there you go. And then actually, let's do. Just your first upside. Your first upside's worth it. Yeah, your first upside's worth it for that trade. $2.46, and that's just your first. So yeah, I like that, but not right now. Not right now. I'll wait. Now, if we get back above that 55 EMA, back below this just recent breakdown area, I'll be okay, because we do have price contraction on the way back down on falling volume, but I need to see some more volume, because if you just zoom out and look at this, like what just happened today is like short. So just letting you guys know, man. That's how I see it. All right, that's all for me today, guys. Let's go ahead and switch on over here and do the regular end of the show. If you guys enjoy the content and appreciate the show, please feel free to support the show by hitting that thumbs up button, making sure you subscribe. Head on over to twitch.tv/cracking crypto. Give us a sub or a follow on there. We highly appreciate the support. If you just do not want to really be involved with us and watch the show, you can, of course, hit us up on Patreon. Very simple to help support the show as well. You can send Scott some ramen directly, actually, as well. He does highly appreciate that. If you guys would like to support the show in a more substantial way, please head on over to cryptocurrency.com. We do have a wonderful selection of merchandise that Scott worked very hard on. You can actually get the most wonderful of all beverage vessel containers over here at Mugs and Drinkware. I will show you. This baby will improve your trading skills. Actually, if you drink your morning coffee out of this, you will be 80% more attractive as a human being. You will also be 95% more successful in your analysis of trades. Results not guaranteed. Past performance is not indicative of future results. This is the Cracking Cryptocurrency HODL mug. Guys, go check that out. We do get a kickback from the sale. The merch helps keep the lights on. We appreciate that. But if you guys would like to start January off on the right foot, if you are tired of the losses from the bear market of 2018 and you would like to be in a profitable, honest, and transparent trading group as well, please consider heading over to premium.crackingcryptocurrency.com. Link is in the description down below. You do get access to all my trade setups and signals. You get access to the other analysts and traders' trade setups and signals as well. You get mentorship. You get a one-on-one support. You get access to the private Discord members lounge and VIP day trading voice chat. You get access to our database library, our live trade tracking sheet, which updates price in real time. You get access to your own customizable trade journal. You get access, again, to our resource library and our webinar series designed to teach you everything that I've learned over my experience in cryptocurrency and traditional markets, designed to help take you from novice to profitable trader. All right, guys, that's all I got. If you have any thoughts, questions, opinions, comments, suggestions, sarcastic remarks, and or death threats, leave them in the comments section down below. Hit us up on Discord or email us at contact@crackingcryptocurrency.com. My name's been Justin Wise. Hopefully today's show has helped crack cryptocurrency for you guys. I'll see you tomorrow.